G'day guys, and welcome to this week's trade recap video. Now before I get underway, once again guys, if you could just smash that like button. Just smash it, smash your screen. No, actually don't smash your screen, you need it to watch me. But do hit that like button, I would appreciate it, to be honest. Just lets others know that I'm back, gets the content out there to the masses, to all those Forex traders around the globe who need a good coach, a good mentor, a good live streamer, someone who's, actually gives a shit about helping others. So that's what these videos are all about. So if you could do so, make sure to hit the like button. Also leave a comment down below guys. Let me know how you went throughout the week. A tough one this week. Honestly, I traded the full week. Obviously didn't trade Monday, seeing it was Easter Monday, took that day off. But otherwise I traded Tuesday through to Friday. I only traded the London session this week. Few and far between were the opportunities in my opinion. Took one trade, it was break even. So still well in profits for the month. So happy that. Well, since I've been back actually, this month's just started. But anyway, I thought I'd go over that trade. It's an interesting trade. It's a newer sort of entry for me. So I'll get underway guys. Enough of the humor or my attempt at humor. All right, so looking at GJ here and what we have got. So this entry is what I call just the limit zone to zone order. Now, first of all, so GJ that day, come London session, this was actually prior to, so it was the EU, this was pre-EU candle, the pre-EU M30. So what we had done prior to that was GJ had created low during an Asian session, pulled up, formed a support on the way up, rejecting this resistance here to the left, and then created a higher high at pre-EU. So at that point there, that was the highest, was the high of the daily candle. So at that point there, what I wanted to do was, I didn't want to buy it because we had a 4-hour level to the left hand side. If I was to drag that out, sorry, I'm going to use this arrow as well, but we're approaching a level of resistance. So I wasn't interested in buying upon continuation because it probably needs to be in buys from lower down. But what I wanted to see was price reject. Now, when I look for potential levels to get involved in trade, I'm looking to see on the way up. So I'll just get rid of this now. I'm looking to see on the way up, where did price create a minor support? Because the reason being is price did create a minor support. If it were to continue bullish, it should really respect it. Back up and continue to the upside. Occasionally get the fake out, which is what we got in this instance. That is the reason why I always like to see some sort of retest to see if the area will hold the previous zone or if price will pop back above and end up trending in line with what was the prevailing trend at that point. So this was the level of support we had formed on the way up. Not only that, this is the level where if we were to maintain structure bullish on the M30, we need to stay above. So what we had was pre-EU M30 candle closed below that support. That was my trigger. Now, knowing that if I was to take a sell upon continuation, I had very little margin down to the next support. It probably wasn't gonna be worth it. It was 3 pips that mine area would have been targeting that, excuse me, that area there, which again 7 pips, so it's not really enough to secure anything. So what I said to myself, to give me more margin, what I want to see is price either way to pull back to tap back into that zone, to retest it, to grab some more liquidity. And if we are to continue bearish, seeing we had flipped the structure, what we should do is reject, begin to flip the candle back bearish. And if we break the low of that previous candle, likely would have probably about 80% of the cases, we're likely going to head back down to the support to the left hand side. In this case, we didn't. So I'll explain the trade management in this trade. So again, got my catalyst candle closure below, but it closed a little bit too far down into the range below, leaving me no margin. So I said to myself, at that point there, I'm going to look for my limit order. So price pulling back, stop loss above the catalyst candles high. That was 13 and a bit pips, around 14 pips. I think I had on my broker, my beta trader. And the entry was back at the low of this bullish candle. The candle formed support. So I set the sell limit back at that candle's low. Now price tapped in and basically rejected pretty much straight away. Had probably like a pip drawdown, I think max, maybe a pip and a half. and then it rejected. So when it starts to reject, at what point do I get to break even? Well, as soon as we begin to flip back bullish, seeing we've pulled up to retest that zone and begun to pull away from it, as soon as we begin to flip back bullish and break the low of that bearish catalyst candle, that point there, I said to myself, I'm getting to break even, because if we are to continue bearish now, at that point we had lower high, lower low, we should continue to the downside. There will be no need for us to pull back yet again, and let alone come back to that zone, retest that zone, and start popping above it if we were to continue bearish. So at that point now, I don't want to be involved in the trade anymore. So basically what happened was it tagged me in, dropped to about 5.5 pips, and then pulled all the way back up. A lot of people think you're too strict with the management, should have let it go, but look what happened if I would have let it go. Would have hit the full stop loss. So I think it's quality trade management in my opinion. And use the counter probabilities. You have a lower high, lower low. If you were to continue bearish, you have no need to pull back up. If you do pull back up, structurally you did just flip bearish, but the bias was bullish on GJ. You were in a pretty solid uptrend at that point. So if that was the case and pull back up, it may close back above this support, and this could just be a little bit of a fake out, grab liquidity before the price pushed to the upside, which is exactly what happened. So once again, so with this one, just to recap what I want to see, and it could be to the upside, could be breaking resistance, tapping into the previous level to buy it, but in this case it's a sell option. So what I want to see is price, first of all, preferably tapping into a higher time frame resistance to the left. Then I'm looking to the left to see, have we got any clean traffic? So this is not the best example, but if we have cleaner traffic like what we had here to the left, that'd be even better if it was in traffic like that. Then I want to see, have we got the margin? What's the margin have we got to the next support? 3 or 4, sorry, I think I'm up to. You need your catalyst, so you need a closure below, and it has to be quite a significant closure below. I'd say on GJ, looking at minimum 5 pips below the support. Gold, NAS, probably 7 to 8 plus. Nice strong closure below. Can have a bit of a wick to the downside, that's all right. We're not so concerned about that. We just want it to actually give us that strong closure, the catalyst, the closure below. As soon as we have that, we can look to see our stop loss above the catalyst candle's high and our entry back at low of that support. So the bullish candle is the candle, obviously, closure, the bullish candle, that green one right there, is the candle that forms and confirms support. So that is where we set the limit order. And once again, once you're triggered in, begins to flip back, it flips back in your direction, flips back bearish. At that point there, you can pretty much just get to break even, and especially when it begins to break low of the catalyst candle. A lot of the time, the low of that catalyst candle would almost be all, from a lot of the time actually, from the trades I've taken in this particular setup, that's been the level you get to, that you begin to skew. It's been around 10 plus pips a lot of the time. But nonetheless, get to break even in anticipation, have no need to pull back up yet again. If we do, this is probably just a fake out. So save yourself. But that to me is quality trade management. So the end result was break even, and price did continue to the upside. So yeah, so I just wanted to go over that trade, and just give you guys an idea of why I took it, what gave me a confirmation, and I think it was a quality entry and quality trade management. Yeah, let me know what you guys think. Did you take the trade? I know 1 or 2 took it on stream. Yeah, so I hope you enjoyed this trade recap. If you'd like me to go over any other particular entry in more detail, leave a comment down below and let me know. Once again, don't forget to hit the like button. As for the streams, I will be back Monday and streaming as per usual. Once again, thank you so much for your support. It's been really good, the feedback I've been getting. We've doubled the subscribers basically in the 2 weeks since I've started streaming, which again, it's not huge, but still I think I've got like 70 new subs in 2 weeks, which is really good. I'm happy with that. So we'll keep the ball rolling, guys. So that's why I need you to hit the like button and leave some comments. Yeah, have a great weekend, and I shall see you Monday, probably around 6:30 AM UK time. I look forward to it, guys. Cheers. Take care. Bye for now.